India portfolio. Now, bond yields spiking across the world as fears over further rate hikes loom. US 10-year yield close to its highest level since the 2008 financial crisis. And in India, bond yields remain above 7.2%. Meanwhile, the rupee weakened against the dollar, breaching the 83 mark and ending at a record low. Latha joins us now with more on the money market action. Global fears weighing on the Indian markets too, Latha.
Well, absolutely. The rupee closed at an all-time low, as you said. And this was despite the public sector banks selling a lot of dollars, possibly on behalf of the Reserve Bank. Actually, on Independence Day, on August 15, when Indian markets were not trading, in fact, 15th and 16th, in the offshore markets, the rupee had gone as weak as 83.50. And there was some intervention by the Reserve Bank there as well. Today, it was relatively better behaved. This is entirely because of the way in which the dollar has been strengthening. As you point out, the dollar reaching to 103.5, 103.6. Just about a month ago, it was below 100 at 99. And this turnaround is largely because while the US data is coming out stronger and stronger, the comparable, a currency is always a comparison between another country. ECB is likely to have stopped its rate hikes because of the problems in Germany and even to some extent in other countries. Japan, again, export weakness, unlikely that the BOJ will do anything in terms of the yield curve control. China weakness. So weakness again in other countries is making the dollar look strong because the US data is strong. And that's working towards the rupee weakness as well. In the yield market, it's an entirely different set of factors. There is a domestic problem in terms of the July inflation number, which came at 7.44. And now the bond market in India expects that the incremental CRR hike, cash reserve ratio hike, could become a slightly more permanent feature or could be spread to all deposits. Or it's possible that the MPC may even contemplate, at least debate, a rate hike. So clear tightening from the Reserve Bank is expected. That's what you could see. And the other factor, of course, was the US yields now at some multi-year highs. There's a sudden fear after the Fitch downgrade and other such related events, downgrading of banks as well, a fear that the US fiscal deficit is simply too high and it's likely to remain high for a goodish bit. US debt is likely to remain high for a goodish bit, and that's why you're seeing the steepening of the curve and US longer-term yields rising, and that's having a concomitant impact on other countries' yields as well, including India. In fact, if you didn't look at just the 10-year, you looked at the swap market, then there has been a 20 basis point rise in yields.
Latha, many thanks for joining us. Yes, the minutes of the US Federal Reserve meeting implying that we're not done with rate hikes in the US just yet, and that, as Latha was pointing out, having an impact across the globe. On to a CNBC-TV18